Hey traders, how's everybody doing? Welcome back. It is Monday, February 9th. Hope you had a nice day of trading today. Let's get right into it. So the markets just closed recently and Wall Street did pull off a tale of two stories today. AI infrastructure stocks ripped higher while software names got punched in the mouth again. The S&P 500 rose 0.47% to close at 6,964. The Nasdaq gained 0.9% to close at 23,238, and the Dow barely budged, inching up just 20 points to 50,135, but not before touching a fresh all-time intraday high of 50,219 earlier in the session. So the AI hardware trade came roaring back today. Nvidia climbed 3.3%, Broadcom and AMD each gained roughly 3%, Palantir popped up 4.5%, and the big mover was Oracle. It absolutely exploded 9% higher after D.A. Davidson upgraded it to a buy. Investors are clearly buying the dip on anything tied to AI infrastructure right now. But here's the tension. Software stocks are still getting crushed. Intuit and Salesforce both fell over 2% as the Anthropic-fueled SaaS apocalypse continued. And in case you didn't know, SaaS stands for Software as a Service, so SaaS apocalypse. The market is drawing a hard line between companies that build AI and companies that might get replaced by it. Eli Lilly also made headlines today announcing that it's acquiring Orna Therapeutics for up to $2.4 billion in an all-cash deal. I wish I had $2.4 billion to spend on something, but okay, so this is a bet on next generation in vivo CAR T cell therapy using circular RNA. So what is that, you ask? It's a technology that could let patients' own bodies generate cell therapies without removing cells. So that's pretty cool. Lilly gained over 3.5% on the news, continuing its run as pharma's biggest deal maker. Gold surged above $5,000 an ounce today, hitting $5,034 as a weaker dollar and geopolitical uncertainty fueled the rally. Meanwhile, reports surfaced that Chinese regulators are urging domestic banks to reduce their U.S. Treasury holdings, pushing the 10-year yield to 4.24%. That's a story worth watching closely because less foreign demand for our debt means higher borrowing costs across the board. There was one other bright spot today. The New York Fed's consumer survey showed inflation expectations falling to a 6-month low. That's music to the ears of anyone hoping for rate cuts later this year, with markets still pricing in at least 1 or 2 cuts by year end. So looking ahead, this is a massive data week. The delayed January jobs report will drop on Wednesday, and the consensus is around 60,000 jobs added with unemployment holding at 4.4%. Then Friday brings the January CPI. On the earnings front, Cisco and Spotify report this week, and the big one, Nvidia's earnings, which will happen on February 25th, is starting to loom large. How markets will digest jobs and inflation data this week will likely set the tone heading into that catalyst. So that's it for today. I hope you had a nice day of trading, and we'll see you back here tomorrow. Bye-bye, everybody.